Welcome everybody to Volatility Trading Strategies. So recently I introduced a new strategy to VTS called the VB Threshold Strategy. Now it's not new to me in my trading of course, but it is new to the VTS community, and it's so far been received with a lot of excitement. It's a tactical rotation strategy that switches between different ETF holdings depending on the current reading from my volatility barometer. Now the volatility barometer is my comprehensive volatility index that I've created, which is quite familiar to the VTS community at this point. There's a dedicated video for it here if you want to check it out. It gives readings from 0 to 100%, and then when divided into 20% sections, whatever section the volatility barometer value is trading in, there's a specific ETF I hold that I feel gives the best performance. 0 to 20% is the TLT, 20 to 40% is ZIV, 40 to 60% SPY, 60 to 80% TLT again, and then above 80% it's the VXY. Now most people I assume will just use those ETFs as I've set up the strategy and have at it. But some traders, and believe me I get it because I'm this way as well, they like to adjust things a little bit and possibly make a few replacements to match their own level of risk tolerance. So that's what this video series is about. I'm going to break down all 5 of those sections and talk about some possible replacements for each of them. Talk about different asset classes, different leverage factors, everything you need to know to make an informed decision. And if you want to give this strategy a little test drive, head on over to my website. There's a free trial there, and you can see whether this strategy fits in with your long-term investing goals. So subscribe to the channel, give the video a like, and follow me on Twitter if you want, but let's get into the first replacement. So just to get a baseline here, this is the entire strategy with all sections included. Now what people want to know is, are there replacements for the individual ETFs that may boost performance? Or at the very least change the risk profile? For example, what does it look like if we replace bonds for gold? Or what if we replace the S&P 500 for a leveraged S&P 500 position instead? There's several potential replacements we could think of here, and I'm going to answer all of those. Let me start this video series off with the section of the strategy that potentially yields the highest performance. That's the 20 to 40% section. When the volatility barometer is in this range, volatility is reasonably low, and it's the most stable portion of the market. And for me, when it's in this range, I hold the short volatility ETP called ZIV. Now, I have a dedicated article discussing everything you need to know about the ZIV, and why I personally believe it's the best financial product on the market from a risk-reward perspective. But that's my chosen holding, and here's the performance of that section when holding the ZIV. You can see this 20 to 40% section accounted for 45.63% of trading days since inception. Like I said, it's the most stable portion of the market. During a bull market, the volatility barometer spends a lot of time in this range. So using ZIV here as I do, that's an annualized return of 24.38%. And I've also shown a normalized return based on the fact that it's only trading 45% of the time, and in other trades 55% of the time. Lastly, a maximum drawdown of only minus 11.66%. This is the stable core of the VB threshold strategy. But now I'm going to show you some possible replacements. And of course there are dozens that we could think of here, but I'm only going to show the ones that I personally feel are viable. If it deviates too far from the general philosophy of the strategy that I built, then I'm not going to include those. But I will talk about all of the major ones that I think all of you are wondering about. The first replacement you can see here in the same chart. That black line below represents the S&P 500, the SPY, holding during the exact same 45.63% of trading days. I've shown this because if a person wanted to ignore volatility ETPs altogether and just use stocks, that's what they could expect. Now, it doesn't look great in comparison to ZIV, of course, but that's actually still pretty decent. It's a normalized rate of return of about 13%. So the VB threshold strategy, just using stocks and bonds, should still handily outperform buy and hold S&P 500 on its own. Lower drawdown, better performance, so the SPY is a viable option for those who are very conservative. But here's the first interesting replacement. This is the SSO, which is a 2 times leveraged S&P 500 ETF. If using SSO during the 20 to 40% section, it's about double the return of the S&P 500, so that's good. The problem is, that's only half of what the ZIV was getting. And secondly, the drawdown is nearly twice as high as I get with ZIV as well, at minus 20.52%. It's still fine, and if there was some reason why you were against volatility ETPs, then the 2 times leveraged S&P using SSO is still viable, but again, not as good as the ZIV. The next possible replacement, the SVXY. This is another short volatility ETF, which in the past was one of my favorites. The SVXY was essentially the same thing as the old XIV. They were 1 times leveraged front 2-month VIX futures products. The problem here is, since the February 5, 2018 Volpocalypse event, the XIV was terminated, and the SVXY here had its leverage factor cut in half. So now it's only a 0.5 times front 2-month VIX futures product, compared to the 1 times it used to be. That means lower absolute performance for sure. But then on the flip side, lower expected drawdowns as well. So while it is watered down, it's still a viable product. And the results here when used in the 20 to 40% section are really good. Now just to be clear, this is using 0.5 times SVXY all the way back to 2011, not just after it was changed. I simulated what the deleveraged SVXY would have been and used that all the way back to the beginning, to give the most accurate representation of forward results. But a 15% return, normalized to 33%, which means the SVXY is still better than the 2 times leveraged S&P product SSO from before. Personally, if I had to choose, I would definitely use SVXY over the SSO. But once again, the ZIV is still substantially better than both of them, which is why it's still my personal choice. Now this one is interesting as a potential replacement. This is the one many in the VTS community have been asking me about. It's short VXX. The VXX is a long volatility 1 times leverage factor front 2-month VIX futures product. So if trading it on the short side, it's very similar to the old XIV, or the old 1 times SVXY it used to be. And worth noting as well, if a person didn't want a short VXX but still wanted the 1 times leverage factor, you could double up your allocation of SVXY and it should track fairly similar to this. It'll be slightly different because short VXX and long SVXY, they do behave a little bit differently in crashes as well as bull markets, but it should still be in the ballpark. Now as you can see, short VXX during this 20 to 40% section nearly doubles the performance compared to the already very good ZIV that I use. So you might be thinking, well, why doesn't he just use this? Clearly it's better, right? Maybe. But I'm a conservative investor, and I definitely value smooth performance and lower drawdowns above just chasing big performance. Also, the maximum drawdown here of minus 34.97%, that is a little out of my ideal range. Now, it did only happen once and only for a week, and then it recovered quickly. But for me, the ZIV is already so good, I don't personally feel the trade-off between risk and reward is worth it. But I know a lot of you will, which is why I wanted to go over these numbers and actually show it. Short VXX during this 20 to 40% section is definitely impressive. So again, here's the full strategy, all 5 sections, using the ZIV, which is my personal favorite. This is how I've been trading the strategy in my own account, all my chosen ETFs. To me, it's hard to look at this and feel the need to improve on it. But everyone has different goals, and it's not for me to say what yours should or shouldn't be. So here's the big comparison everyone wanted to see. The full VB threshold strategy using ZIV as I do in red, and then the full strategy when replacing ZIV with the higher returning short VXX in black. And like I said, a double allocation to SVXY would be fairly similar. So using that short VXX still looks pretty great to my eye. Larger drawdowns, of course, that's to be expected, but still within the range of acceptable, I think, if it was a smaller allocation within a broader diversified portfolio. I suspect some of you in the VTS community will want to use that short VXX or the 2 times long SVXY for that 20 to 40% section of the strategy, and I really don't have a huge problem with that. It's just for me personally, 10 years into one of the longest bull markets in history, the Fed cutting rates now in what appears to be a little bit of a panic, now may not be the best time to be getting overly aggressive. I'm certainly not going to stop trading. I'm not at all worried about the next recession, even if one is coming soon. All of my strategies do have the ability to rotate into safety positions, as well as take short market positions when necessary, so that's not what I'm saying. But with the overall uncertainty in the markets right now, whipsaw action the last 18 months, I'm perfectly comfortable preserving my emotional capital by reducing drawdowns and just waiting for a better time to start getting aggressive again. On the other side of the next recession during the next bull market phase, I'll probably look to replace the ZIV for something else as well. But that's what's great about the VB threshold strategy. It's very easy to follow, totally transparent in the positions that it takes, and it can be easily adapted to match anybody's personal risk profile. So if you're interested in this or any of my other trading strategies, head on over to my website and claim your free trial to see what the VTS community is all about. You're always welcome. Thanks for watching. Thank you so much for watching the video. So don't forget to subscribe to the channel and go check out my website right here. There's tons of articles and videos on there, as well as a free trial to join the VTS investing community. What have you got to lose? Come see how I personally navigate these unruly markets. See you next time.